Hello, everyone. This is the Mortgage Brothers Show, and I'm Eddie Cannell.
I'm Tom Cannell.
Welcome, everyone. This is our 5th podcast, and Tom and I have decided to talk about student loans and how they affect mortgages. And this comes from a question that was asked by someone in our audience, a realtor, and we thought this was a great topic.
And we're not really sure why it's so interesting because no one has student loans out there, right? No one does.
Oh, yeah. It's so rare.
So rare.
So rare that we see student loans on credit reports.
Actually, yeah. Super kidding. It's a very, very valid question and point that the realtor brought up. So we like to talk about that.
That's right. Hey, and everyone, Tom, his oldest daughter, is now a freshman in college. So he is going to be experiencing the pain soon.
Yes, already have. I'm in the middle of it.
Yep. So, I think that we want to make this, the topic is actually, easy to talk about. And for those of you in the audience, if anyone has student loans, you're going to, especially nowadays, we went to school about 20 years ago and we didn't have income-based repayment plans, but now we do. We see that a lot. People come in, apply for a loan, have these, let's just say a $50,000 balance on student loans, and they have these $100 a month payments, and if you really, that's a very low payment for that balance. So, each loan program that we have treats that student loan differently. So, Tom, maybe talk about what you think, maybe go over FHA and VA, because we're going to talk about the big loan programs that we use most of the time. So let's just tackle those.
Right. Okay. And one of the important things, because it can be a real mind twist, and it can actually be a mind twist for me too, because if you lay out on a matrix, the deferment versus the income-based repayment program versus the actual payment, it can get a little bit complicated. But when you step back and you look at it, typically it's always going to be a worst case, whatever is showing on your credit report, or the 1% number, and we'll bring that up. But if we just step back and we look at FHA and VA, that's what you wanted me to cover.
Yeah,
okay.
And then I'll cover the conventional programs.
Okay. So if we just look at the FHA and the VA, and you're wondering why is Eddie just covering conventional, I'm covering two. FHA and VA are what we call government programs. So typically they're underwritten very similarly. There are some nuances to each, but they are considered government programs, and that's why we're clumping them together. But when it comes to the borrower who calls us and says, I have an income-based repayment program, I'm so excited because I have zero payments, even though I have $100,000 worth of student loan debt. Is that okay, Tom? And I would say it depends on which program you're going with. With FHA and VA, that's not necessarily a good thing, because FHA and VA will require you to have use either the actual payment on your credit report or 1%. So I think that's probably one of the biggest pieces when you look at this, because so many borrowers will call in and talk about their income-based repayment program. Does that kind of cover the income-based repayment piece? There was another piece on deferment. You want me to cover that right now, or do you want me to wait?
Oh, okay, sure. So there is only. Let's go ahead and cover that with VA.
Okay.
If someone does have student loans that are deferred, and a lot of people do, they call in, especially when they're newly graduated, and they say, I have deferred student loans, so you're not going to count the mortgage payment against me, are you?
Right. Same answer as if you have the income-based repayment program. With FHA, we still have to count a 1% payment against them. When it comes to VA, VA is a little more lenient. As long as your deferment is greater than 12 months, we can actually accept a zero on that and not have to hit you with that 1% payment.
That's right. So that's okay. So real quick, if someone has income-based repayment plans and they have, zero payments, because some people do have zero payments on those income-based repayment plans. If there's zero or $100, if it's less than 1% and they're trying to get a VA loan or an FHA, it won't work. We're going to have to count 1%. And the only exception is if someone has deferred student loans more than 12 months.
And it's a little opposite
Go ahead.
A little bit opposite of what you would think. You'd think that on the FHA and VA loan, they'd be a little more lenient than conventional, but it's the opposite. They actually hit the borrowers with that 1% required payment, even if it's zero.
That's right. So I'll cover that real quick. I mean, conventional financing is very lenient compared to FHA and VA. I will say they are not lenient on deferred student loans. If you have a deferred student loan, they're going to count 1% of your balance. Okay. So again, the only program that cares about deferred student loans is
that's a little surprising.
Is VA, the VA loan, if it's over 12 months. So conventional financing does not care. They will hit you with 1%. So what they do allow you to have a income-based repayment plan, and if it's zero, they'll count zero. $10 a month, they'll count $10 a month. They don't care what the balance is on the student loans. If you qualify and you show us the paperwork that shows that you know what your payment is, we'll count it just what the paper says.
So if they call in and say, good news, I qualify for a conventional loan, I have a deferred, or I qualify for a conventional mortgage, I have $100,000 in student loans, but they're all deferred, Eddie. What do I do? Isn't that great news?
Okay. First thing I tell them is that's not great news. What you need to do is you need to immediately qualify for an income-based repayment plan. Basically, contact the loan servicers, see what you can do to you want to get in repayment. Because if you want a conventional loan, you have to get in repayment.
Even if it's zero.
Well, yeah, okay. I will say it, or we can count 1%. If they're in deferment, I'm just going to count 1% if they don't want to get in repayment. If they don't want to actually call their servicer and start that repayment process, I will count 1%. And if their debt to income ratios are okay, I'll leave it. I'll just count 1%. But for a lot of folks, that 1% will put their debt ratio too high. So I'm telling them, contact the servicer and get in repayment with maybe an income-based repayment plan.
Okay. Did we leave anything out?
I'm sure there's details, and I know that everyone listening, of course, replay this if this is confusing. There are some details we're not putting in this podcast. There's just too much, right? There's just too much for us to talk about. But this covers, I think, the vast majority of scenarios. And by all means, just contact us or your loan officer whenever you have questions on student loan financing.
Yeah, good. And also, I would just add real quick, we've been talking about student loans from kind of a reverse perspective, which is from the debt side. But when you're looking at it on actually originating a student loan, if ever you've wondered, how much the student loans will cost you, they typically are about 1%, per month is what your payment is. So we say that again. So if you are actually in your car right now thinking about getting a student loan and you're going to school and you think you're going to graduate with $60,000 worth of student loans, wondering what your monthly payment is going to be, it will likely be about 1%, maybe a smidge over.
So that 1% is actually probably an accurate ballpark. You're saying.
It's used on purpose, but you can also use it going forward. If you're trying to plan, what are my monthly payments going to be for my student loan? They'll literally be probably about 1%.
Okay.
So $60,000 in student loans, you walk away with about $600 monthly payment.
All right. I think we've covered everything that everyone kind of wants to hear. I think so. And I think we did a good job.
Yep. No, good job, Ed.
All right. Hey, okay. So next week we're going to have a new podcast. We're going to figure out what to talk. If anyone has any suggestions, just be sure to email us. And everyone have a good week.
Thank you, everyone. Keep those questions coming.
See you, everyone. Hey guys, thanks for listening to the Mortgage Brothers Show. Please let us know if you have any questions you'd like us to answer on this podcast. You can email your questions to Tom at azmortgagebrothers.com or yours truly at Eddie at azmortgagebrothers.com. And be sure to ask us for a free quote on your next mortgage. Tom and I will personally work with you and help you through the whole process. Signature Home Loans, LLC does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only. You should consult your own tax, legal, and accounting advisor before engaging in any transaction. Signature Home Loans, NMLS 1007154, NMLS number 210917 and 1618695, Equal Housing Lender.